We've got 5 thought leaders here who are going to share their views with us, and we're very privileged to have all of you here at the same time. So without further ado, I'm going to hand over to Meirav. Thank you very much, and please introduce your panel.
All right, so hi everybody, and we're now joining, I think, one of the most interesting panels at all. You know, talking about the future is always interesting. And we're going to be talking about FinTech 2030, the future trends and the challenges ahead. For those who don't know me, I'm Meirav Harel. I'm a veteran in the fields of finance and technology, combining the two before they were named FinTech. I managed the business development and product of one of the biggest security trading websites in Israel. And I've been chosen in 2020 as one of the 100 most inspirational women in blockchain, after having been chosen twice in London as one of the leading women in FinTech in the world. And we have with us 4 great people that I'm going to let them all introduce themselves. And we're talking about Ronen Assia, the managing partner at Teammate and FinTech and co-founder at eToro, and Professor David Gershon, founder FinTech Center, Hebrew University of Jerusalem, Avishai Silvershatz, sorry, Avishai, managing partner in FinTLV Ventures, and Andrew Takyi-Appiah, co-founder and managing director at Zeepay. If you want to say a few words about yourself before we delve into the questions.
My turn. So, as you can see from my background, all I really wanted to
is the quiet because of connection issues.
Can you hear me?
Can everybody hear us?
We can hear you.
Can you hear me? Meirav, can you hear me?
Can you guys hear me?
Yes. We can hear you.
All right. All right. Did
perfect.
you hear me introducing everybody and myself?
We did. All right.
Can you guys hear me? It's like I'm hearing quiet from your side. Is it my connection?
We can
We
hear
hear
you
you loud and clear.
All right. Did you hear me introduce myself?
Yeah.
Yes.
Yes.
Did you hear me introduce you guys?
Yep.
Yes.
Are we ready to delve into the questions?
Yes.
Yes.
All right. So I'm going to start with the main question for each of you to say, what are the main future trends in FinTech, in your opinion?
Shall we go by order of appearance? I don't know who should go first.
Who wants to go first?
I'm happy to start.
Yeah, Andrew, why don't you start?
Okay, so first of all, thank you very much. Good afternoon, everybody. Good afternoon, the whole world who are watching this. Thank you to Israeli Tel Aviv FinTech Week for this event. I'm rather honored and delighted to be here. In terms of global trends that will happen by 2030, I'm sort of going to give you a picture on Africa and global.
Okay.
From where I sit, looking at my crystal ball, which I've been looking in the last 7 years, what's going to happen by 2030 is that the wallets conversation, which is mainly electronic money issues or issuers, the EMI wallets will become mainstay, just simply because Bitcoin and crypto are still struggling to get acceptance globally. And it's partly because of the fact that sovereign states are not ready to give up their sovereignty when it comes to currencies. So more than likely, what I see is that the wallets will become a lot more accepted because they are the mask of regular currencies. I see that by 2030, about 60 to 70% of the world will have digital currencies, which would even justify the play of the wallets. So that's the first one. The second thing I see is, from where I sit, I see that there's going to be a lot of convergence of global wallets.
Wait, you're cutting up. You're cutting up.
Would interoperability becoming a commonplace globally, what you're going to see is a lot of wallets are going to be integrated into one. So just as we had Visa, MasterCard, EMV, we're going to have integrated wallets, Apple Pay, Samsung Pay, Zeepay, MTN Mobile Wallet, Vodafone Cash, all the Gcash, all these global wallets will come into a centralized platform, probably driven by the likes of First Data or some other player. And these wallets that are integrated will be a lot more acceptable than they are today. It will run parallel to the likes of Visa, MasterCard, and Eurocard. And when they run parallel, then they become alternative payment instruments. So all of a sudden, what you're going to find is geographical blocks, trade blocks, economic blocks would have their own sort of digital wallets, which mask their digital currencies, which means also that what you're going to find is that a lot of the digital wallets will come into the capital markets and become mainstay. When that happens, 90% of retail banking across the world will be fully disrupted.
Huh.
And that disruption,
You're seeing that the banks are going to be disrupted.
retail banking will be fully disrupted. Most retail banks will play the SME game or predominantly the larger SME commercial game. The concept of intermediation at retail for retail banking franchises will disappear. And this is simply because all these wallets are legislative instruments. And once they're legislative instruments, then they don't need to be intermediated by a bank, which is what would have happened in the past. So rather, they will now, you find that the challenger banks, the light banks, the mobile financial services will become the players that intermediate the likes of bill payments, the likes of subscription payments, etc. So from that perspective, that's what I see. I also see that the global payments, which is in trillions, would double itself. The likes of Africa will become about 500 billion and will move from about $100 billion. And it's simply because of the fact that a lot of bottom of base will come into the wallet program. Once the bottom of base comes into the wallet program, what you begin to see is that the money that is usually at the bottom of the barrel will come to the top. And so you see a lot more funds running through the ecosystem than is happening before. Already in Africa, we're seeing it in Ghana, we're seeing it in Kenya, we're seeing it in the likes of the southern part of Africa. It's like Ivory Coast, it's just lighting up. Because the more you pass legislative instruments as wallets or wallets as legislative instruments.
Oh,
sorry, no. Sorry.
Okay.
That's the plane. The more you pass wallets as legislative instruments, what you start to see is that the bottom of base will come into the ecosystem. The more we also have these digital currencies, then it means that as we bring it into the capital market, then there's actually more room for them to transact. So GDP will go up. We'll start to have the real sizes of most African economies, most global economies. Apple Pay will not only sit on Apple, but Apple Pay will be fully integrated across wallets. And that's going to create super apps and super platforms like Amazon, which will become even a huge global e-commerce platform, just because for the first time they've moved away from the rails, which were just Visa, MasterCard, Euro, and Discovery, the US platforms, to wallets, which are a lot more global and geographically spread across various continents. So that's sort of where I see the world going in 2030.
Nice. All right.
I agree with some of the things that Andrew said, but some differences in opinion. So I agree that basically in the next decades, banks will become technology companies, and all the retail activity basically will become mostly automatic. So on this sector, it will be banks will operate like all the challenger banks. I think that the area of not small businesses but large businesses will remain closer to what it is now. So when it comes to large amounts, where there is more scrutiny on deals and funding and so forth, this will be similar to what we have now. The focus of retail will, and then I can assume that some of the banks will just buy challengers to operate on the retail side more automatically. And some others like JP Morgan and Citi, these large banks are already pretty much automatic, and they can run their businesses quite well on the retail as well. So I would say that not much is going to happen from the customer's perspective. It will look pretty similar, except for the fact that there will be tremendous variety of sources to manage money on a day-to-day basis. And also, I think there will be a major difference in the way that money is managed on the long run. There will be lots of platforms that will offer short-term or long-term investments, fully automatic, and basically services that are now offered to hedge funds will be available to the retail. So from this perspective, I think this is really not a huge difference to what we are used to see now. I think blockchains and cryptocurrencies will not become a standard payment tool for various reasons, but I think one of the things that everybody has to worry about is the cost of mining cryptocurrencies. I think at some point it will be so expensive that it will have to become a threat to Earth, and I think it could be solved for this. And of course, I agree with Andrew about governance and so forth. But even if this is ignored, and even if regulators will accept it and pave the way for cryptocurrencies, I still think that the cost of mining is going to be so huge. The more exposure financial organizations have to cryptocurrencies, the more expensive it will become to mine it, and this can take Earth really to a catastrophe. So I think somewhere it will stop. And on the other hand, one thing that I totally agree with Andrew is the fact that I think that Visa, MasterCard, American Express are at risk in the next decade, because at the moment they control a highway, okay, and all the payment applications that we know basically live on this highway, but eventually there will be a deviation from this highway, and once applications start bypassing Visa, MasterCard, there will be totally different way to pay in stores, and which will also save tremendous amount of money. And so initially this will be like cash versus credit, and eventually, but later that will also offer credit. So I think on the outlook of how payments are going to be done, I think there will be a deviation from Visa, MasterCard, unless they are going to cut all the commissions on the way and the fees, so that it will be something that is earning money on a different basis, like on data or something like this.
All right, thank you.
You know,
Interesting.
Meirav, you asked the question is about year 2030, and I think that the one thing that we can say very confidently about year 2030, that probably one of the most important things that will happen then is something that we don't know about today. Andrew mentioned super apps.
Yeah.
We all know what today. All of us know what super apps are. How many of us did know what super app means 9 years ago?
Right.
I think that very few people that are not intimately familiar with China knew what super app means 9 years ago.
Right.
So similarly, I think that if looking 9 years into the future, something that is unexpected to us will happen between now and then, and it's
like a black swan, like another black swan.
Exactly, like the road, and really super apps are a very good example of something that really came upon us as a surprise if you're looking on a 9 year time frame. So this is one general philosophical observation. Something unexpected will happen. I think we'll see, especially in the retail part, a very strong Darwinistic pressure. There will be less and less companies, because the more automated things get, the more that we see more and more winner takes all type of situations, maybe monopolies or duopolies, but you don't see a very large number of players when things are almost fully automated, and therefore this Darwinistic pressure will reduce the number of players, especially when you're talking retail and SMBs. You'll see less players surviving this game. This is not for the faint of heart. This requires very deep pockets. I think generally speaking, we'll see a smaller number of players. And I think, and another thing that really probably goes without saying, but I do want to say, we'll see less and less human beings, again, except for two things. We'll see human beings in all these processes in two places. One place is where things are really complicated on investment banking type of things, where you really need a very high level of sophistication, and it's really, each case is different. And you'll also see them in the very point locations where you need emotional influence over the consumer. These are the only, so for example, in insurance, people don't usually buy life insurance unless they actually trust the person on the other side of the table or the phone. Because you really need to have a very high level of emotional trust. And these type of things will still require human involvement 10 years from now or 9 years from now, not because the information is so complicated, because there is a lot of non-cognitive aspect to it. And this will stay for the next, it might be my guess that it will continue to be the case 9 years from now and 90 years from now. But almost all other aspects of retail will be automated, and we will see very few human involvement in these processes.
Nice. All right. Ronen, I think we haven't heard your thoughts about this.
What can I say?
What are the main trends?
All of these interesting speakers before me, I think, nailed most of it. I can say that from my perspective, looking at the broader trends, I think what is interesting is, there is a sort of separation between the different layers of fintech. I call it the holy trinity of regulation, operation, and application. And I think on each of these layers, we will see gradually more and more separation. So I think, as Dudi mentioned regarding, the banks and their role in the system, I think they will be forced to become the plumbing. So, I see the banks more, Dudi called it becoming a technology players, but I think
the infrastructure maybe.
Yeah, more about the infrastructure and basically the regulatory layer that will serve other companies. Then there's a different layer of companies that will help us with abstracting most of that operation or operation/automation layer. And at the end, we'll see what we see now, the proliferation of retail companies, which is just the application layer. And I think if you would look at the traditional company several years ago when they had to build the entire stack all the way from the regulation operation to the application, I see we will see more and more experiences being divided. And I think it's fascinating to see how, everybody who is in fintech for long enough knows it's all about the plumbing. So you go and you stitch so many different components together. And I think the level of sophistication and acceleration of that trend will just continue. So I think the broader thesis here is that every company will be able to give some sort of financial services in the future. Every company that has a big brand, I like giving the example of Starbucks. You'll go into a Starbucks, which people think about as a coffee company or coffee franchise. But not long is the day when you'll go to Starbucks, you'll ask for a coffee, and they'll ask you if you want a micro loan to pay for your frappuccino, because they will be able to do this very easily. So through the point of sale, through integrating more and more services, and I think that's where the future is heading.
All right. So if I look at what we've all been speaking about, we've been talking about payments, banking, regulators, the big tech companies, but we haven't spoken about central bank digital currencies and what kind of money we're going to be using, except saying what you said, Professor Gershoni, that you don't think that it's going to be digital currencies because of the high mining prices. And Andrew, you also mentioned that, but what about, we didn't touch upon what's going to happen with central, like what are the digital currencies, or what are the currencies actually going to be? Is it going to be all digitalized and we're going to not be seeing cash? What is what is the future currency or money that you guys predict is going to be used by 2030? Is it going to be just the same, or
No, no,
Is there going to be something else?
It's a very good question. So I think that cash will disappear in terms of notes and coins, but it will not be replaced on the blockchain. It will be replaced by simply the routing of money that is happening now will just happen instantly on the mobiles connected to bank accounts. So we will not deal with notes in the future. You can imagine that, I don't know, in X years, you won't even have to carry it on your wallet. There will probably be I don't know, face recognition or fingerprints,
like
or
we have in
whatever.
Sweden. Chips
Exactly.
that they have in Sweden that they put in that.
Your identification will basically connect you to, to the source of the money that you have somewhere, and that will arrange for you all the payments. So certainly, but so for me, the digital currency, the central bank's digital currencies are basically allowing basically trafficking money in a safe way, but not on the blockchain, but on the more
still in a centralized manner, you're saying, and it's still going to be central banks that are creating the currencies. It's just going to be, instead of physical, it's just going to be all digital, and the way we transfer it from one person to another will not be with notes and coins, but rather through electronics that maybe could be connected to us, or face recognition, or chips that we have.
Like Avishai said, it's hard to imagine how things will be 20 years from now. He's absolutely right, Avishai. And so probably there will be major changes in the next 20 years, how money is transferred. But eventually, I think somehow there is connection between the wealth of a person or an individual and its ability and the ability of the person to purchase services. And so there must be some connection between wealth and the individual. And this connection is probably going to be by creating a link between the identity of the person and the place where the wealth of the person is stored. It's not on a blockchain, but it can be on various networks that will be completely safe and secure.
Nice. All right.
Well,
other thoughts?
Can I just comment, Meirav?
Sorry?
So can I just make a comment?
Of course. This is a question for all of you, because we've touched upon, I'd say, the venues of how money is transferred, but we haven't spoken about what is the money going to be itself in 2030. So I think.
Okay, great.
Yeah.
So I just want to take it from David's comment and then Avishai's earlier statement he made that something would happen. We just don't know what will happen. I just want to take everybody 3 steps back. I'm also very excited that somehow a lot of us seem to be aligned that blockchain and cryptocurrencies are not going to become the digital currencies people anticipate. Now, 2030 is just 9 years away from today.
Yeah.
Currently, in Africa, we have over 300 million plus wallets, and we have close to 1 billion consumers in Africa. So there's already a picture coming up. In Latin America, the wallet business is a big business. It's led by the likes of Tigo and the other players on the other side. In India, which is a big populous market or country, we also have wallets in India. We have Jazz in Pakistan. We have Bcash in Bangladesh. So there's a huge distribution of wallets on the various continents. Even in America, we have some semi-wallets. If you take Cash App, it still runs through some kind of wallet, right? Then we have our Apple Pay, which is the largest e-commerce platform with its wallets across the world, not just in America, okay? So what I think is going to happen, and we see clearly, at least on the African continent, is that the wallets will become the new emergence of digital currency mask. It's actually going to mask the digital currency and not replace the currency. But the interesting thing is, the more central banks adopt digital currency, the more the wallets will become stronger. Because then all of a sudden, touch and go from my phone, I can tap and pay, I can make payments, I can do all the things I need to do. Now, these wallets will be linked to the super apps, WhatsApp, Telegram,
Andrew,
etc. They'll all be linked to these wallets. And what that simply means is that as we go along that ecosystem, you're going to see that currencies are not replaced, notes and coins are more digital, And you find that in corporate banking, we'll start to do a lot of EFTs. There's going to be a lot of EFT transfers along corporate banking. In SME, the SME commercial space, there's going to be some amount of EFTs. There will still be cash in that economy because the SME economy predominantly are driven by cash. But what will surprise all of us is that the retail economy will be largely driven by wallets. So that's sort of how I see it going. And so just to backtrack onto what David was saying, crypto will go, it won't become a mainstay. Mining it will be more and more difficult. The more and more the US government gets onto it, because of all the security exposures they're having, the more and more you're going to see that mining crypto will go into the dark realm where it came from in the first place. Wallets will come to center stage and be in the front. And what will happen to the Visa and MasterCard rails is that they will take the backstage. Not because they are not good, they're actually very exciting, but it's just because the wallets are more and more touch and go. They're on the phone. And what you start to see with the challenger banks is that there's going to be a lot of challenger banks that will spring across the world. Remember, we've entered a new 100 years. The last 100 years we were in before the pandemic brought this new 100 years. Banks opened up. We went into world banking, we went to all types of banking. Now, this new layer of banking is the digital realm. And that's why the challenger banks are going to grow. Africa is going to have a lot of its challenger banks. Europe will continue to have it. America will have it. But the challenger banks will now become more profitable because they are not intermediation on the card rail, but they are doing intermediation on the wallet rail, which belongs to them.
Yeah. So I wanna kind of like question what you're saying and your thoughts, Avishai and Ronen. Do you guys agree that digital currencies are going to be extinct, maybe because of the high price of mining them, and central bank digital currencies are what we're going to be seeing? What are your thoughts about this?
I think first of all, you know, there is a big movement from proof of work to proof of stake, which will reduce the energy needed to mine the cryptos, and I think that's a big movement. And you know, some of the famous contenders to the crown have already started utilizing it, as well as all of the debates around Ethereum 2.0. With you know, to the dismay of some of the miners that are going to lose some of their prized tokens. But I think it's not sustainable. So I think it's already stated that the Bitcoin mining energy is equivalent to all of the energy consumption of Argentina or something of the sort.
Right.
And that can't continue in this space. Will we see it extinct? I don't think we will see it completely extinct as long as the traditional banking or financial system doesn't serve, you know, half of the world, as Andrew mentioned. I think there will always be a place for payment networks who are, you know, outside
the mainstream
system. Exactly. And I see these use cases getting more and more prominent, again, to the dismay of some incumbents and old school financial institutions. But I think that's a real use case. I mean, I see the number of unbanked in the world is just a staggering number. It's in the billions. And it doesn't make sense to keep so many people deprived of what is, you know, in 2021 should be a complete commodity. And definitely the move to centrally backed digital currencies is super interesting because hopefully we will see a much more robust and reliable system. You know, people who are outside the financial system don't realize that whenever I make a transaction, it goes through, you know, probably 100 different databases just to make sure everything is in place. So it happens in real time, but the level of efficiency is so low because of all of the legacy systems that it really needs replacing quickly. So I think the movement to something which is completely digital in every aspect, all of the aspects of KYC, identity, AML, etc., is just essential to keep systems intact. And that's going to be very dramatic. The only spoiler I will say that people have this hope that if everything becomes digital, then people will pay less taxes, and that's not going to happen.
No, of course not.
Just more.
Or less commission. No.
Yeah.
But what you're saying,
I think that there is a
what you're saying. First of all, we're getting also feedback from people in the session, and they're saying that, let's say one of the comments here is blockchain was not created as an alternative, but rather a remedy, which kind of like integrates what you're saying, Ronen. 2008 woke us up about the banking abuses and lack of trust. And how are we going to be dealing with this? And another question that kind of was asked is, okay, if we're going into consolidation and having tech giants and big companies kind of like taking over everything that has to do with money, then how do we prevent too much power being in the hands of too small amount of providers? And that's a question.
So
I'd like to address the first one.
Oh, my God.
The answer is regulation.
I'm sorry.
Sorry, go ahead. You go ahead.
Okay. So I'd like to address the first question, and I think a lot of the belief, there is really a religious belief in the cryptocurrency. It's almost a religion. Is the hope that somehow this will relieve us from the power of governments and large corporations. There is a huge libertarian. Yeah, there is a huge libertarian desire here, which really drives the motivation of many people, not the big guys, but many of the small guys that deal with this, basically share this libertarian view that this would save us from the control of government. And if you see, and because the one thing that is really in the very center of cryptocurrency and everything blockchain is the lack of central source of trust. This is really the whole, in the essence of the whole thing. And the reality is that this is very similar to the hopes that the internet will be a source of objective data and information to all of humankind. And if you remember, some of us really believed in this vision 15 or 20 years ago. And we all had these idealistic dreams that this would happen. And this did not happen with respect to information, and it will not happen with respect to money. Central banks and governments will not give up control over currency, over the flow of currency, over the relationship between currency in one state and country to another. This is not going to happen, and this is why this idealistic belief is doomed to fail.
Okay, so that kind of brings us to the second question. So if we're assuming that the powers that are going to be the powers that be, both from the banking sector and governments and tech giants, how do we, as people in the financial system or as societies, kind of keep ourselves safe from negative effects that could happen from it?
Well, I want to take this. You see, this is how I see it. First of all, that we have antitrust laws all over the world. So I don't see how the super giants will take over the world completely. But also remember, we have private equity and venture capital all over the world. They are going to offload these investments. And those investments are that's what's going to create those superpowers. But the beauty about it, I want to look at it from the reverse. Look at a continent like Africa and look at a simple platform like Amazon. Look at Jumia, which is an African platform similar to Amazon. There might be other ones. In Indiana, we have Silvershatz, which is a proprietary local one as well. All these platforms, all of a sudden, would have a lot of interrelated cross activities where they become open markets, serving a larger community who can use their own wallets to pay. So all of a sudden, they're superpower or super tech, but they're not necessarily taking over the world. What it is that they've opened up the world more. If we take insurance, all of a sudden insurance will be available to all. Because if you take Africa, for example, predominantly insurance penetration is 2.5 to about 5% cumulative across the continent. Now, if that's the case, the more wallets we have, the more distribution we have on wallets, the easier it will be for us to sell insurance. and make it micro and therefore cheaper. So I rather see it opening up the global economy and creating that global village we've always wanted to see. A small world where everybody moves and participates without necessarily being in a particular jurisdiction. And thanks to God, IoT and AI would even expand that process faster from onboarding, KYC, from faster payment, would almost move from near faster payments to immediate payments. So I think it's rather going to open up the world. Yes, there'll be some acquisitions and there'll be some mergers, but antitrust laws all over the world will protect all of us.
So I disagree with you, Andrew. I think
that's why we're here.
Okay.
That's why we're here. We're putting great
Okay.
brains together and trying
Right.
to think together about the future. And each of us has their own, way of thinking, and this is what makes it interesting. So, sure, yeah, David, what do you
So
think?
let's take Facebook as an example, right?
Okay.
So Facebook obviously is the most natural candidate to become a super app. I mean, they can easily do it, and I'm sure they have most of the technology required. And the only reason they don't do it and kick out almost everybody else is because of regulation. And the reason, luckily, regulation is stopping them is because they actually intervened too much in privacy and got too many people scared about it. So I think the trend that we are going to see is the opposite. I think that more and more people are now starting to worry about their privacy. They realize that that Amazon and Apple and all these companies know everything about them. And to think that these companies will manage all their life is a little scary.
Yeah.
Is a little scary. And I think regulators in most of the world, there are some pockets that things can happen. I don't know if you know, but in Brazil, for example, about a year ago, they allowed Facebook to start offering payments, and then
they backed out. They backed out last minute.
And now it's back. Okay.
Yeah.
And then you don't know if something was 100% kosher there, or something happened between it's Brazil after all. But so there could be some pockets that things can happen and allow some super apps to take over, but generally, I don't think that this is going to happen. People will worry too much about their privacy, and I think that the regulators will stop them. And now, why is it good for us that there are super apps? Okay, it's only good for us if super apps use their power to give us better deals, right? Like you think, if you go to Amazon and you get from Amazon much better insurance than if you go online to some insurance companies, then you say, okay, great, but that's not the case. If you actually compare prices of financial services on all these giants, they're not cheaper than anywhere else. So they make money from the information about you, but they don't really save you money.
And they don't share it back.
I think I respect that, David, but let's just go back to the forum, the platform, or one of FinTech platform. We're in Tel Aviv virtually, and I love it. I'm enjoying Tel Aviv. But, mate, we're talking about FinTech rails. We're talking about growth in FinTech. The super apps, yes, Mark is doing some wonderful stuff. I wish him well. But privacy is privacy. You can't infringe on people's privacy. But you're creating market access. You're opening up markets. At my company, I sit in Ghana and I talk to immigrants in Italy, in Modena, Italy, just because of Facebook. And I'm able to tell them about the services I offer and how they can reach their loved ones in Africa. Wonderful. And I pay Facebook for that. What I'm just going to say is, who is going to win this battle of the superpowers and the super apps and the tech giants is the one who understands that their platform is an infrastructure that can be leveraged, like Uber. If that's the case, then I see a realignment of Facebook's model. I see a realignment of Amazon's model, and Amazon got it right in the first place anyway. The marketplace where everybody can come on and sell. So it's the infrastructure platforms that will win. I actually see the super platforms being the one that have the infrastructure that says, come and leverage me.
Yeah.
And so, yes.
I want to kind of like, we don't have a lot of time. Andrew, I'm sorry to interrupt you. We were kind of like really short in time, and I don't think we've heard Avishai and Ronen enough. I'll just sum it up and say that from what I understand, that what you guys are thinking is that actually the part of the regulator in fintech is actually going to become, how do we stop the abuse of power from the tech giants to happen? So maybe that's the next step, that they're like, from what I understand that you guys are saying, that the regulator needs to intervene here and say, okay, this is how the regulator needs to step up and not let this happen, or this scenario happen. But I'd really like to hear Ronen and Avishai's input both about this, and we have additional questions. Tell us if you want to talk about these issues, or if you'd like us to pass on to the next open questions that we have.
I have a very quick comment. I think that the question is, what can we do? I think this was the way that the question was phrased. What can we do about it? And I think that the answer is, it's a political matter, basically. The amount of regulation is a political matter. If you want very large corporations to be restrained, vote for the party that supports this view. And this is, so first and foremost, this is a political matter. It's a matter for the political system to decide what they want to do with the big tech gorillas. Again, and within the theme of we cannot really predict the future, we might get in the next decade into the point where people say we need to build some additional force within the political system, which is not government, which is not the tech gorillas, but some grassroots movement that will really have power to shift things, like Occupy Wall Street, but 2 orders of magnitude bigger. Maybe this would change things. But basically what we're talking about here is not a technical matter, but a political matter. Mm-hmm. And just to agree with Andrew, obviously we see that these technologies make, for example, insurance available to billions, literally billions of people that have not been able to enjoy this type of things before. So definitely something very good is happening to billions of people.
So you know, while we're talking, Avishai, I wanted to ask you something about insurance, because we haven't touched upon, there are a few things that we have not touched upon. And one of them is insurance, because insurance is part of fintech, and it has to do with healthcare. And what we're seeing, maybe it even has to do with the pandemic that we've been seeing this year around us. And how do you think that, let's say in 2030, or how would I'd say the developments in insurance kind of be noticeable in 2030 in relation to how patients and insurances and hospitals and healthcare collaborate? Are we going to be seeing changes there coming from the side of fintech?
I think we'll see huge changes here, because insurance companies really changed the way that they perceive their role when it comes to life and health. While this is so, in the past, the traditional role was to pay you when something bad happens. Now they're moving very forcefully into prevention. So taking care that the person's health will not deteriorate, or will deteriorate slowly, will become a major thing for all companies that sell life insurance and health insurance. Prevention is becoming a key theme, and we know that actually prevention is a financially very effective way of improving a health outcome. Prevention is much more cost effective than fixing a problem retroactively. So insurance companies will become a major players in preventions. They want to be involved in prevention in chronic disease, because it gives them more touch points to the consumer. Today, you meet your insurance company in 2 events: one when you need to pay them, and then the other one when you have a claim. Both are not pleasant interactions.
Yeah, that's right.
You don't really enjoy neither one of them. In the future, I think in the case of insurance, the insurance companies will say, look, we really want to be a partner with you to keep you in good health. So I think we'll see a dramatic shift in the role and the proactivity of insurance companies with respect to healthcare.
Thank you. So that's very interesting, but I want to kind of like circle back and ask Ronen, because I know that from what I heard from what you're speaking here, you kind of have a different view regarding where things are going? Could you please share with us?
I think, I think I would generally say regarding the debate versus tech versus banks, I think, people have to realize financial services is not a winner-takes-all game. So unlike in other areas, there will not be just one company who controls the entire financial aspects of consumers worldwide. It's not going to be, I think the dominance of what we see as Amazon and Apple and Facebook is very difficult to replicate across financial services, and we're not going to see the big banks phase out anytime soon. I think the regulators, as they always do, will have to make sure that everything is in order to be able to serve the customer, which sounds like a generic sort of statement, but I think the relationship between the big techs and fintechs is still in diapers, as we say in Hebrew, and that's gonna dramatically change. But if I am more concerned about the current system and its fragility and its reliance on legacy rather than worried about Amazon taking over. So I think it's about time to see a real technology overhaul when it comes to how services are being given and processed. And I think at the end, the consumers will just get better service, better rates, and hopefully, which is more important, better accessibility. Because again, looking at the world from a macro perspective, the reason fintech is so flourishing in developing countries is because nobody had access up until technology came in. And I think that is the level of innovation we should strive for, where people have more access and more abundance of products. And Andrew is much more knowledgeable on this subject than I do. But if you look at the rates people are paying for simple transactions in other parts of the world, it's just staggering. So I think that's going to need to change dramatically.
Thank you. So I think we have time for one more question, Johnny. And I want to, I'm thinking, we've been speaking about, I'd say, the macro level of where things are going. Let's kind of delve a little bit deeper into the technologies themselves. And I'm going to kind of ask you guys a riddle. That the question about which technologies are going to be kind of the most important ones in 2030 as opposed to now is a question that had been asked by a lot of magazines and researchers, and they asked many, I'd say, fintech specialists around the world and people working in fintech. So I'd like to kind of ask you guys what your take on this, and then we're going to compare it to what the rest of the professionals around the world in fintech are thinking. So the question is, what would be the 3 most important financial technologies in 2030? Which one of them? Okay.
I have to guess or just throw out something.
No, what do you think? What do you think? I'm asking your complete opinions, and then at the end I'll tell you what the consensus was. But I think it's more interesting to hear what you guys take without me kind of ruining it for you. So.
I think the big debate is quantum computing and can we get there? That's going to be a huge subject. There is every big company in the world now has some sort of quantum facility, quantum research, quantum people working on it, but it's yet to be proven that it can be done. But I think if we will get there, that will be a dramatic change of how we look at technology overall, not just in financial services. Second, which we've mentioned in the centrally backed digital currencies, that's, I look at that as a technology play. So I think that's going to be another dramatic move. And what else I can think of? I think, and this is a bit of science fiction, but I think the biggest challenge today is data liability. So, I think thinking out of the box, in a utopian world, I would say we need to look at financial services who don't hold the data at all. And I think that's gonna be interesting if you look, 10, 15, 20 years.
Could you explain that? What do you mean that financial services don't hold the data? Who would be holding the data? Could it be humans themselves holding their own data, or is that something that we're not going to be seeing?
I think some sort of, if we can create a technology where the person holds his own data, and the organizations just do the transactional side, that's going to make more sense rather than what's going on right now. That so many companies have so much valuable data, and so all of the security, identity, fraud implications are just increasing all the time. So I think that's not sustainable, and people have to think about infrastructure. I would call it financial systems data-less infrastructure.
Which would kind of like circle back to what Andrew was saying, because if we combine data into our digital wallets, and everybody would hold their own data, and then the transactions would be just like with money.
Yeah, I think if you take it to an extent of if you think about crypto wallets, if that happens, then the banks have nothing to do within the system anymore. So it's an evolution of about 300 years of banking that's going to disappear if there's no need for a central database to manage the ledger and the transactions. But we're not there yet. But I think it's definitely something to aspire to.
And also, the tech giants will not have. If that happens, then they're not. It's kind of like pulling the carpet from under their feet. If everybody holds their own data instead of having all the data centralized in their hands.
Yeah, definitely. I think it will drive some dramatic change to the business models as we see them today. I still think people will be able to share data, but not in the form which is today, which I have my personal data with probably 100 different organizations.
Yeah, they know more about you than what you know about yourself.
Yeah.
All right. Who else wants to answer these questions? What will be the 3 most important financial technologies in 2030?
So I just want to take what Ronen said and then just use it to answer you. I think the fintech revolution was too fast for central banks and governments in general. Now they are very fast. If that's so, what I think will happen dramatically is that data will become centralized with a single point access where players go in to validate rather than store and validate and transact. That's one. The next thing I see that would happen dramatically is we're going to move away from augmented reality quickly to artificial intelligence, getting ready for quantum. AI, with the advent of 5G, will make a lot of things more and more exciting in the fintech realm. And that will be from onboarding, KYC, compliance, validation, transactions, reality-based instant payments. So that's why I see that happening. And I see that by the time we're in the mid into 2030, you'll see it happen. I mean, days are coming when we're going to have a lot of precision payments. Look, if you look at Africa today, we have a lot of traffic, not just Africa, but most parts of the world. We have a lot of traffic. Days are coming where with precision technology, you can even order your bag and get it delivered to you in the traffic.
Yeah.
Okay. So I just see all of this opening up the world so much that it won't even matter anymore where you are. What matters that there'll be a lot of fulfillment centers in different forms. That fintech is going to make all of this possible. Global trade, Africa trade will boom because the money will come from the bottom and it will come into the ecosystem. Real money will come to the capital markets and the domestic treasuries will become more powerful. And that's my lasting piece. Everybody, I wish you well.
All right. What about you, David?
I will just add to Andrew and Ronen. I think that quantum computing is not like a decade from now, to be practical. It's probably a few decades from now. And I think that the concept of storing the identity, which I totally agree with, is again not something that will happen in 10 years. It's more like a few decades, and it's very possible that the giants will have a SaaS model for people to store their own data. So maybe that will be how they transform their business model. But I think that if you look at the next few years, definitely the most important technological change is 5G.
5G.
Across the world.
Okay.
5G
I'm writing down all of the things that you're saying, yeah, because it's going to be nice to compare it. Okay.
5G will make a huge difference. Everything will happen totally differently. And the second thing that we need to see is a next jump in AI, because I think the AI level now is very mediocre, and it has to transform to the next level. And I think that this is probably something that will happen in the next few years. And so in 2030, I think that will probably be, we'll see a different level of services that we know today, but in a much better, much faster, more accurate, more conclusive way.
That's two. 5G, AI, and?
That's the two.
These are the two. All right. Avishai, how about you?
Yeah, well, I'm Israeli, so I'm not in the business of answering questions. I'm in business of rephrasing questions and giving the answers. So allow me to take this liberty and rephrase the question. So I would differentiate between two levels. One is the things that are complete game changers. And with respect to this type of game changers, probably they will not happen in the next 10 years. One of them is quantum computing, and the other one is AI. AI in the sense primarily of on the point where we get closer to the singularity point, or where we get closer to real general AI. If these two things, when these two things happen, the universe will become completely different. So they change everything. I don't think that neither one of them will happen in big time in the coming decade, but they are not very predictable, and they will happen everything. Nothing else will stay the same. So these are, I would say, the mega change level. On the lower level, I think we see cybersecurity is a thing that is going to affect the lives of companies and countries. There is a war going on. The growth of cybersecurity risk is growing exponentially. This is a very big thing. And the other big thing is low code, no code. And I'm sure that this is something which sounds funny to most of you. The issue of large corporations, and we see this very clearly in insurance, stuck with antiquated system that they cannot really do almost anything in order to move forward, is a huge issue. This is part of the thing that really determines their destiny.
Legacy systems. Yeah.
Exactly. And some systems of low code, no code can help them migrate, because otherwise they will eventually die. So this is a very important trend as well.
Nice. Okay.
Good point.
So do you guys? All right. So do you guys want to hear what the consensus was around the world?
Please.
All right. So they said 71% said machine learning, which kind of connects to what you guys said about AI. Okay. The second thing, none of us kind of touched upon it, except when, it's the Internet of Things, IoT, which kind of touches upon 5G that you spoke about. So, David, so that's the second thing, and that was 49%. Okay. And automation, about the processes, that's where 40% brought up as one of the three major technologies that are going to be affecting and relevant in 2030.
So I will suggest another 1 hour panel to discuss why automation is not a technology, but we can leave it at that.
All right. Okay. So I think our time is up. Look at that, 59 minutes and 14 seconds. And I'd really like to thank all of you for sharing your insights and for joining us here.
Thank you.
And I hope our audience enjoyed listening to I'd say it's like brainstorming of thought leaders, and it's fun to see this and very interesting. I hope you guys enjoyed it as well. And I would like to say thank you to Johnny for bringing us all here together and enabling this sharing of thoughts.
Thank you. Thank you. First of all, thank you, Meirav, for navigating that very difficult with four such
five. Do not forget the women.
Yeah, but what a way to go out. This ends essentially FinTech Week Tel Aviv 2021. We've had 4 days of discussion. We started looking at FinTech and how it's been in the spotlight during the pandemic, and people have seen the value of FinTech, and now we've gone in full circle to look at where it will go in the future and how it will be an integral part of the recovery. I want to thank our panelists. That was one hell of a panel. Thank you, Avishai. Thank you, David. Thank you, Andrew and Meirav. That was incredible. We've made a recording of it, and this has to be pushed out into the public domain.